Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Tuesday, August the 19th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. You might say, Anne-Marie, what do you got going on here? Why is the chart looking so different? So, as we noted in prior days, we've got a lot of major overlap where the traders are battling. And so, very often, when we see that kind of heavy congestion, we need to zoom out to make sure that we are looking at what we really need to look at. And so, I expanded this out to the 4 hour. It does not change what you want to do intraday trading, but it does show you what the price action is looking like. So, what I've done with the ES is I expanded out to the 4 hour. And what we've noticed is that in the recent past, we've had three outsized volume events. The first one, August the 2nd, that day was fairly bearish. I also got asked yesterday, hey, when you draw the boxes around these candlesticks, do you care whether the candle is a bearish candle or a bullish candle? Hey, you don't. You absolutely do not. What you want to think about in terms of framing your trade is what is the short-term moving average doing and what is the longer-term moving average doing. That's going to tell your tale. Notice, if the trend is up, you draw a box and it breaks out, it's very likely to run into prior resistance. And we can look to the left and we can see these lines that do just that, right? So you look to the left when you're in a breakout formation, you look to the left and you go, all right, well, I can see that there's all kinds of rejection over here. There's my formation. When it comes back into the candlestick area, you want to look for what is my trend. If I'm above both of my moving averages and I have upward momentum, it's going to be a buy the dip. We remain in a buy the dip formation. However, we are now underneath a tight moving average, and I expanded this moving average out a little bit, and so I want to move it back to our 14. Oh, for the love of Pete. Properties. Here we go. Let's move this to 14. And you're going to see trend is going to be the most important thing. Not if you break it. You want to look at the confirmation. Trend is master and commander. So if the trend is up, coming into a fade, they're going to buy the dip. That's what traders do. So now we're sitting up here. We had a double topping formation, a fairly big volume candlestick on the 4 hour space that was a little bit outsized. And that date is August the 14th. On the same day in the afternoon, we had another candlestick with big volume, and we're sitting inside of the range here. So we look at the low of this candle. Doesn't have a lot of volume, but it's still an important candlestick formation. And we see that we are trapped between a high of somewhere around 6,500 and a low somewhere around 6,453. So what are the traders going to do? What is trend? Trend is slightly down. Right? It's down. We are underneath the moving average. We've bounced up and we've failed that moving average. But the larger formation gives us an upward moving average. So we're in a cross current. Could easily be mean reversion. The value area high, 6,430 to 6,440, somewhere around there. And then the old resistance breakout at 6,427. Point of control, 6,411. This chart looks like August weather, sideways to grinding into support zones. What would I be looking at? If my trend line is down and my momentum line is down, I'm going to look for the bounces that give me selling opportunities. And right now, those are anywhere from 6,480 to 6,490. All right? Very sideways. We are below that opening candle formation. We broke below it. Now we're going to the top of it. Early morning price action puts that at that 64.80 area. I'm going to be looking at 64.85 potentially to take a trade, but this is what we are staring down. Dips are buys in the big picture event, but we are in a mean reversion. So it's another sideways day, very likely consolidation, very likely noisy, very likely range trading. At some point, we are going to break this consolidation. Where is it? I don't know. But if we lose 64.50, which is rounded about that overnight low that we are holding over the last few days, my suspicion is that we drift down into 64.27. It's a very sticky day, by and large. I took, I don't know, 2 trades yesterday. Probably going to have the same sort of situation today. Not a lot of trading. It just is what it is. Sometimes the market gives us great opportunities, sometimes it does not. Mean reversions, very noisy. Look at how the candlesticks are retracing each other across the board. Let's take a look at the NQ. That's what we're staring down right now, the E-mini NAS. Same 4-hour formation. Listen, the large volume candlesticks are very far in the past. Very far being, of course, relative. This is all the way in August 1. They're far away in terms of price, not time. The next big one to watch is the candlestick here. And that date is July 31st. You can see that that will be the box that we run ourselves into in general, right? If we lose this area, we've got a 63 moving average. 23,622 is a support floor for this very wide candlestick formation. And so this is really what we're staring down. Mean reversion could take us all the way back inside of the value area. That's 23,500. Do you want to take a short and then hang on for that? I don't think that's a good idea. Why? Because the relative trend is still up. Momentum is down in the near term. Trend is down in the near term, but the bigger motion is still upward. And so what we have is mean reversion, low volume nodes around this 23,700 area. If we lose 23,750, we're likely to dribble into that zone below 23,622 to the value area high, 23,500 and some change. Use these ranges to trade. This is heavy consolidation. If it were me, which of course is going to be me, I would be looking for the bounces into 23,843 or 23,850 to get myself a potential short that allows me to drift into the trade action. It is really very messy. Let's take a look at the YM. YM formation, we've had 2 candlesticks in the near term that have been pretty solid volume. One was on August the 13th. You can see that we came into the center of that range and bounced in the pre-market. We're coming to the top of that 4-hour candlestick, also primary resistance. This is the kind of trade action event I would say, all right, let me collapse down into a tight time frame and see where the price action begins to fail at around 43,150 all the way down to 45,150, correction there, and then 45,100. That's going to give me that price action event that bounces into resistance and then gives me the short action, because overall trend is down, momentum is down, traders are trying to find support, but the big picture still has got an updraft going there. And so if we want to look at the near-term relative candlestick formation, we could draw this one up here, but we can see what we end up doing is sitting inside of a big noise pocket. So we don't even need to draw that, right? Upward pressure event pushes us to the north. Wait for the chart to tell you it's done going up in order to trade from a short perspective. And if you pull back and make a higher low, you know that you're going to retrace. Otherwise, big consolidation with short action up here, as I mentioned, 143,150 to 45,150 to 45,170, somewhere around there. You could get in early, but I'm not sure it'll be worth it. Man, I am getting my numbers wrong all over the place. Let's take a look at Bitcoin. We had candlesticks in the past. Let's see, low end of the candlestick is where we're sitting in. The candlestick from August the 1st. We've re-entered that candle. We bounced. What is trend? Down. On the tight time frame, what is trend on the longer time frame? It's flat, but we're also under it. What is momentum? Negative, but losing steam. What is the trade? Also rotation. Up into 118,130, all the way to the point of control at 118,700. Wow, they've started the grinding already. All the way down to the base of this candlestick, which is 114,000. We could see ourselves move back. Old resistance down here. I do believe this chart is in rotation. 111,000 is next. However, there's going to be a battleground at the 113,000 zone. Why? Because there was a battleground there before. Okay, so bounces or sell zones into a deeper support, and the bounces could be fair if we get a lot of noise. And so I would say trade action really not opening until the failure of the point of control at 118,800. Okay, let's take a look at oil. This one's pretty interesting. Oil has been in a pretty bearish decline, trend down on both moving averages, momentum starting to shift. And so this is telling us that the downward pressure, although it's continuing with price, momentum is saying it's trying to find a floor. What does that floor look like? It ends up looking like a congested trading range. And so what do we want to look for? We want to look for selling pressure at $64.27 and potentially buying pressure somewhere around $62.40. We are coming into that zone. Could we have it as support? Yep, we could. What's the trade? I'm going to go in the direction of trend. I'm going to wait for the bounce, and I'm going to try and short it. If it gives me a pullback that holds higher, I'm going to get out of the trade, because trend is trying to shift, but not very well, right? I mean, there's no big buying events going on right here, and momentum is clearly near zero. We can see what that does. It gives us support to resistance, resistance to support, support to resistance. That resistance is still lower. It's still lower, meaning the sellers are walking the price action down and stepping on the necks of those buyers trying to hold the floor. It's just not looking really good right now, okay? All right, lastly, let's take a look at gold. Not lastly, we'll do this fine next. Gold, 4-hour formation. Look at how sticky this is, right? Very big buying candle here on August the 1st. Really big explosion. So notice I did a Fibonacci, expanded it into the range. It almost came to 3,540, which is the 3 event, immediately collapses. Notice, outsized volume relative to the chart, but not big volume. The big volume candlestick is this one. And that gives us 3,467 as the floor, and now they're sitting around here. You can see the volume profile says they're building a base. How bizarre. Point of control, very important. Look at how they're arguing around it. So what does this tell you? Another consolidation event. What are they looking at? They don't want the floor here at 3,368. The buyers are saying, all right, as long as I don't lose that, I'm in good shape. But notice, what is trend? It's down. Momentum is flat, but trend is giving you direction. Momentum is just telling you the speed and power of that direction. And so we've got these lower highs and still lower lows. So my thought is bounce action, going to give us sell zones. Ideally, what would I like to see? I would love to see it test 3,400 and fail again. Will it give me that? I don't know. But if it comes up there, I think it's a pretty good short, right? We just want to collapse into tight time frames to give us the range. If we lose 3,368, I think we head to 3,340, where this big volume candle is sitting. Very heavy congestion, folks. Another day of extremely sideways and ugly patterns. You can see volume drifting off across the board in so many charts. You know, sometimes it's just a good time to break out the knitting needles. You know what I'm saying? So, biggest candlestick volume as we look at SPY. This occurred July 31st. We know that was some kind of news event. I don't really care what that news event was. But what we do see is, since then, the price action has been tepid in volume perspective, right? The volume continues to drift down. We could look at this candle, but it's just about the same as this candle. We're inside of it. So we might want to draw Fibonacci on that. No high volume coming into the price action in general, but the Fibonacci does give us a 2x retracement and somewhere that says, hey, listen, if we lose $641.50, we're going to have some sideways pressure. Okay? That's essentially what is going to happen to us. So what do we want to look for? If you're in the SPY, folks, do something else. Go do some research. This is terrible price action. We are sitting inside of a congested box. Are we building inventory? Yes. Does that matter right now? No, because we're looking for the break down or the break out. No idea which direction it's going to be, because we are essentially sitting in the 4-hour candlestick that we made on the 15th. Today is the 19th. So essentially 2 days of sitting in a pocket. Don't fret. Wait for it to break. All right, folks, that's it for me. Don't get your knickers in a twist because I moved to a 4-hour. When you're trading, you want to do the same thing you always do. You want to see the wide angle view, definitely. But when you get down to your trading, you go to your 30-minute charts, you're still going to see you're caught in these volume pockets. It'll just tell you, hey, this is what I'm looking for. Trend is down. Tighter moving average shows it slightly up. Momentum, slightly up. Listen, could it break to the north? Yes, but there are going to be sellers there, okay? There are going to be sellers there simply because of what price action is telling us in the broad, congested fashion. All right, everyone, take care, and I'll see you on the streams.